The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And not a lot going on in the markets. Just kind of a lull here at the end of the year. And what I thought we'd talk about today, I usually on a day-to-day basis try to just kind of give you what's going on with the golds, the silvers, the soybeans, the indices, maybe some stock picks here and there off of the scanner, which I'm showing right now in the den. And a little bit of a global, what's kind of rattling the bushes in a couple of different areas. But what I thought we'd do today was really just talk about my personal preference on trying to put some money to work. And everybody that sits in front of these screens, you develop your own style. It's a little bit of possible personality involved sometimes, but it's really about what's going to work for you. I mean, I've had prop groups me and a couple of guys had about, in the Chicago Board of Trade on the 12th floor, we had about quite a bit of space there that was very expensive when the CBOT was getting some pretty lofty rental numbers back then. Our monthly rent was about $38,000. And Larry, if Larry's listening to the show, he'll probably tell you that the rent there has historically, I don't know what it is now, but it's been relatively expensive to kind of be in that slot. So what we did is we ran a pretty big global broker dealer, had about 4 clearing firms that we dealt with. One of them was Sage over at ABN AMRO for our proprietary trading. And I don't even know if Sage is still around or if AMRO kind of stopped all that. But, the way that we made some money other than basically transactional type revenue was we funded traders. So, we try to use patterns of dealing with those traders that everybody kind of brought to the table from their experience and, watching the best of the best and seeing what, was the kind of demographic type pool that we really should be mining to try to get the best talent. But basically, we kind of gave them a fundamental platform to stand on. This gets back to what I was originally saying on the opening of the show, is we tried to give them, the mechanics, the risk management conversations, this is not a sprint, it's a marathon, all that, kind of instilled in everybody, and the technicals that we put in front of them, was something I believed in, but there's not a magic pill for this. And basically we left it up to them to kind of put their own unique twist on something that we thought would at least break even if you just kept, coming to work every day, turn the rents the same way, blah, blah, blah. And they would find out on their own as a proprietary trader when to kind of press the gas pedal on the position sizing, when to really kind of understand that there wasn't a lot available. So therefore it's time to just sit still, go do something else. So eventually, if you do this long enough, just like I'm stating with the proprietary traders, you kind of develop a system, hopefully. Protecting your capital is a big deal, but ultimately, along the way, but ultimately you kind of find out, hey, this is kind of the way I can ring the register relatively often. I know I'm going to take some hits every once in a while, but so, going back to what I was saying at the outset, for me, I've gotten personally in trouble trading noisy situations. It's defeating at times to me. It requires a lot of mental capital. I mean, but again, some people make a ton of money trading noisy situations. So my preference has kind of distilled down into, for my own trading, is trying to use a little bit more longer term setups. And I actually love to kind of wrap an option hedge or some kind of option strategy around, those type of setups using a lot of the information that we talk about every day. So when I talk about on the show, hey, here's oil, here's the stops, here's the levels, here's where I think the biased opinion is okay to be short, not okay to be long, vice versa. A lot of times, if it's, for me personally, if it's something that, doesn't have a lot of long-term longevity in the trade itself, I personally just pass on the whole thing, because I'm personally looking for more longer term type movements, and therefore will try to wrap an option type strategy around it to kind of suffer through the noisy situations. If your broker is listening to me, he's going to go, oh my God, Logan's telling everybody not trade as often. But that's just what has really it boiled down to for me. But again, a lot of guys will use the information that I show you on a day-to-day basis, and a lot of institutions use this scanner, believe it or not, to find choice picks, sometimes on a very long-term basis, relative to relative strength and relative weakness and all that, and rebalance their portfolio based on some of the things that we talk about every day. A lot of guys will use our information to trade 30-minute setups. But again, talking about what has worked for me and that unique twist that every trader kind of has to make it it's his own. It's more of a kind of a little bit more patient game. Joey and I have talked, really quite a bit about, as a trader, sometimes you can make your whole month or whole year on a certain very ripe setup. And when that very ripe setup comes around, it's not a setup that you find on a 30-minute profile. It's, hey, this is happening over here, this is happening over here, and I'm looking at this, and there's an anomaly going on a long-term basis, and I want to dig in, possibly back the truck up, but actually put the hedge on at the same time, because if I'm wrong, I don't want to get kind of stopped out and then get mentally all screwed up in the trade. So we'll be right back. We'll further this discussion a little bit more. Feel free to call in anytime, and we can talk about your trading. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So I had a little kind of preface conversation on the last segment about, what basically, in a very concise way, some of the things that, running and funding traders when I was in Chicago and personal preference, temperament really, and what you're looking to get out of the markets on a day-to-day basis. My personal endeavor has really distilled this down for me into more longer-term setups, and that has some overnight risk in it. So these longer-term setups are not, you go flat at the end of the day. So as I look at them now, I don't like to be, open-ended completely overnight unless it's, certain small kind of buckets of capital that is kind of in a larger sense a long-short model. If you're, looking to be, long the strong stocks and short the weak stocks and blah, blah, blah. So if I'm looking at the situations I was talking about earlier, I talked about option hedges to kind of get the insurance plan in place. Obviously, insurance costs money. And, simple setups based around what I just said involving options are what I like to do. I mean, I've seen, a lot of times these option contraptions that people start putting together, the more complicated they get, you have to dismantle them properly. I've seen butterflies turn into pterodactyls before for people, and it just, really, requires a lot of attention sometimes. And then you miss the bigger moves, the more complicated you put the strategies on. So what does that mean? That means that simplifying something. So for instance, let's just, some people have been talking about, are the S&P is going to cave in at the first of the year? I don't know. I mean, that's one of the things that, you don't have a crystal ball. You don't exactly know what's going to happen, but you look at the probabilities, and I look at the probabilities relative to our proprietary information and try to make decisions based on, how do you really kind of squeeze juice out of that situation that pops up, and the probabilities are seemingly there, but how do you how do you hedge the bet? And that's the way I look at things. And for instance, on the first of the year, Trump says some crazy things, whatever, and the market may fall apart for a little while. Some people are talking about it's kind of overbought right now, and if you feel that way, that could happen. But if you look at the S&Ps, look at the VIX, we're down at 12 or so right now. The simple way to look at that situation for me is, if I was kind of trying to gauge, how do I take advantage of that and how do I increase my risk reward scenarios, just being short the S&Ps is relatively risky. This thing could go up another 100 S&Ps just like that. So if you're looking for a bigger move, and you don't want to pay for the insurance as much, and the VIX is relatively low, which means you should be buying volatility, and you know that if the S&Ps come down, that VIX is going to go up, and those option premiums are going to start swelling. Being short the S&Ps and buying in the money calls on that S&P trade, maybe a little bit farther out. So if the S&Ps do come in that particular situation, you basically have unlimited upside. And those options, a lot of times that you bought as the hedge, you're going to have a little bit bigger move because you bought them in the money. But remember, if the S&Ps start coming in, then that VIX is going to increase. Those calls are probably going to hold their value a little bit more than they, would on a gradual kind of move down. If you're looking for that terrifying move down, that is a really nice, simple strategy that's not very complicated. Now, if it starts going in your, if it doesn't go in your favor, you've got the hedge on. Your deltas get really high since you bought some in the money on that particular trade. But if the market starts coming in, you really start having more and more options. I mean, not options literally, but available techniques that you can use to kind of turn the whole particular trade into a free trade, is what I like to call it. So if the market starts coming in, then you've got a chance to look at selling puts, which as the VIX climbs up, you've got actually a free trade on, you've got the calls on, you've sold the puts because the puts are going to start to get pumped up a little bit as the market starts coming in. But you've got to look at also, what are the index values and profile inflection points, and what are your goals on those S&P moves down? And when do you start trying to, maybe sell some puts or start dismantling the original position, maybe take half or even more off, leave some on. And those are the types of trades that I like to do. We talked about the yen trade. We talked about the euro trade. Those have been literally explosive. I mean, over 1,000 pip moves in the yen straight up. Those are the ones Joey and I were talking about. What's the best trades on the books? The yen trade and the VIX trade. Now, the VIX trade was, pretty short-lived. It was an overnight thing that was, you guys remember the election night that S&Ps were limit down, and then by the time in the morning they're actually positive. It was a crazy situation. But those are, and the dollar. I mean, we talked about the dollar moving straight up. We talked about the euro. I think I told you I had a hedge on that trade, and it was just a waiting game. So around 113, we were talking about that with a hedge, buying in the money calls, and now we're at 104 and some change, somewhere down there. So those are the type of long-term trades. They're not going to keep you on the edge of your seat on a day-to-day basis, but they are really nice setups when they develop in the right way. And if they don't, you've got the hedge on, and it's something I think that should be a part of your portfolio, because those larger moves are what's going to really, be the best bang for your buck risk reward scenarios. Somebody was asking, let's see here, in the den. All right, let me go back here. Anybody who had questions, can they repost them in the den, because some of them are buried way up here? I think somebody was asking about crude oil, maybe. Crude oil. Okay. All right, let's look at it on the chart first, and we got about 30 seconds here before we go to break. So here's February crude. You know, we talked about this yesterday and how we started. And again, I'm not so sure crude's going to explode here, but it's kind of, you know, trading and consolidating above the weekly profiles. We're going to further this crude oil talk when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Was just talking about some of my personal preference ways of trading on the first 2 segments of the show today. We're going to get into some usual suspects here. And crude is, 5404. Here's the big number on crude on the daily. We've pretty much, and this is something we kind of touched on yesterday, diving back into the profile. A lot of times you'll see an entire exploration of the fair auction once you see these reversals back into the balanced area. So we've kind of completed this. We're up to the top again. We're trading on, or excuse me, above weekly profiles here. The scanner's telling you all this just by a color-coded scheme that we have in here, or in the scanner. But as you look at this, I'm not really partial to shorting this. Why? Because really, we're above weekly profiles. This is kind of regulating the trade. There is a little bit of an opportunity here. We kind of did a little reversal this morning, getting back in the box. But I don't think there's a lot of leverage here on trading crude from the short side. You also have to consider going to the dollar. Crude's had every reason in the world with a strong dollar to really go down. The dollar is, this is our daily. We talked about the profile action being below, appearing below on the weekly here. So, I'm just not a huge fan of shorting crude. Looking at that long term, it's okay to be long, not okay to be short. Therefore, I'm not really looking at shorting against the top of the profiles on the daily. That's not really where the odds are, in my opinion. I don't know if that makes sense. Whoever asked that question, Russ. So I think it's just kind of a pass. I'm not excited about being short that. So taking a look at the dollar, we were expecting this to kind of consolidate and start ramping up again. There wasn't a lot of reasons to, and here's that 240 profile that we talked about, trading breakouts above 103.15. I think you're getting that right now. So it was a buy supporter on 102.76 we talked about, and then buying the breakouts above 103.15. And that is really the name of the game, just like on crude oil. As you're kind of trading, this type of setup, this is a massive bullish scenario when you have this profile appear below price action like this on the weeklies. Then you've got nothing to hang on to on the dailies. You've had that kind of classic kind of pennant flag deal, this setup here. You're just waiting patiently, and we drill down into the 240s, and this is where we kind of get our sanity as far as where do we orient the stops, where do we, and again, these are kind of the shorter term moves, not exactly that concept that I was talking about the first two segments. This is kind of okay. The trade is still on. There's a great situation here for the dollar. And, crude really, I think, is just, sitting in a situation, it should be actually pulling back more, as you guys know, but, 54.04, any closes above 54.04, I think you've got to be getting long crude again. Playing with fire here, trying to short it right now, in my opinion. All right, so let's hit gold. This has kind of been the eternal short. We talked about this yesterday. It hit that to the tick, 1152. That was your chance to kind of play defense above that area. What did we hit yesterday? 1152 rounded off. So we're down about, 13, 14 cents an ounce here. There's like zero indications for crude breaking stride. Remember, these longer term inflection points take precedence over the shorter term. And this is where, just by way of what I said earlier, where I think the major leverage is when it comes to trading is trading around these longer term inflection points. The 10-year, a very similar situation like gold. I mean, it's turned the rents the same way. There's really no contra divergent technical situations here on crude. I want to also point out the VIX, and this is something, Steve Banger's been on the show many times. This is kind of reaching historical low situations. So that S&P trade, again, which is this particular product, is really totally predicated on what's going on with the S&Ps and the put call scenario there. So we're down to a situation that if you can, just look back in time, and, Basil is an extremely good analyst when it comes to this VIX. You should listen to him. He knows what he's talking about. But we're down here, and if you're going to do that S&P trade, you've got a perfect scenario to really get those calls on as a hedge, in the money calls on that S&P trade at a pretty good discount right now. You can trade the VIX in general. This may not pop for a while, but again, that's that longer term trade that should be a part of your portfolio. And if you're looking at these S&Ps like, wow, they've just, blown a gasket here. The VIX is very, very conducive now to put on hedges, or literally, just to look at buying the put situation, but you've got to weigh those out. There's a lot of cool curves that you can look at within Thinkorswim or quite a few different option programs out there to look at these scenarios ahead of time and what's going to be your best bang for your buck. Okay. And they've got some great shows that they put on at around lunch. Thinkorswim, Kevin Hinks. I hope I said that right. So that's the situation on the VIX. The S&Ps kind of goes in line with what we talked about earlier. All right, and then let's keep going down the line here. NASDAQ, here we go. So this is continuous on NASDAQ, and this morning we're starting to breach areas again. The only way I'd be playing around with this is just like the S&Ps on the short side, but right now it's really okay to be long, not okay to be short this particular index. Another thing that I want to point out when we're talking about the indices is when we look at the S&Ps, we look at this breadth situation. As you remember yesterday, we actually pointed this out. We had kind of quite a few hints of new profiles attempting to appear on the weekly. Those were attempts. Those things have kind of disappeared, and the market's not open, and it looks like we're opening a little bit higher. So that 10% that we showed yesterday, I talked about the only time this would really start getting attractive was, probably above 12, 13, 15 in that area. When you get into 20, you got to literally start looking at reversal trades on this thing, or at least taking profits. But right now that disappeared. The S&Ps are looking relatively bullish here. So we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And yeah, that VIX trade starting to look really attractive again. I'm looking at, again, we were talking a little bit about some of the transformations that happened even since yesterday. Yeah, this thing could continue to move up. I'd really like to see some more indications even before putting on any type of short trade that some things are starting to crack. But you never know when those kind of big downdrafts are going to happen, and a hedge like we talked about earlier is probably in order here. Not a lot of stocks breaking down here. I was looking at the lists, and man, it just looks like that these are still updates here. Uptrend reversals, this is something CME Group, Cintas Corp, Royal Caribbean, these are the only things that are starting to crack. And Royal Caribbean, or excuse me, Cintas Corp, you got, I think, some targets right now that you can start looking at on the short side. 106 down here. Here's the the crack that happened on this stock. I think 106 could happen here. CME Group, the targets on this one on the downside are 111.5. And I think those fair auctions are probably going to be explored. And I think we're going to probably have to search really hard to find really decent short candidates here, and the markets could actually drag those up. So you got to watch out. You got to be pretty selective on the short side. And if we go in here and we just go back to our dashboard on the scanner and we look at stocks that are trading below profiles on the weekly, and then looking kind of across the grid here, Hanesbrand, HBI, these are things that just don't seem to have a chance here. So, these are things that are consolidating. This is a stock in particular that is consolidating on its lows, and things on their lows go lower, folks. This is just an ugly, ugly situation. 2169, selling breakdowns again on this particular stock, HBI. I don't really see any reason to change the attitude on that one. You got another one, MCK. This is a nice little setup here. 141.52 stops above there, and we actually could shoot for the lows again on MCK. I'm just looking for really ugly situations. VRTX, let's take a look at this one. Yeah, I mean, you could look at this as, hey, wow, we're, we've pierced the lows and we're probably due a reversal up here. But, when these things start consolidating on the bottom of profiles and they've broken through and the market's been going up, I mean, these are stocks to really look at that are showing themselves early And the good news is you've got a chance to play defense relative to the balanced areas. Like, in the balanced areas should be your stops on these type of setups. Let's take a look at VTR. This is another one. Just really not participating, obviously, in the this one's in the XLF. Wow, this is kind of interesting. But let's go into our ETFs here on the scanner. And we're obviously all green here, but let's take a look at some of the ones that this sector ranked by an aggregate net profile breadth situation. Let's just go into the discretionaries here. And let's just kind of surf around. Let's look at some, holy mama, NWL. Let me pull this back up. Yeah, this is another one that, let's see, get this back up. Another one that's just, and you've also got something else here weird going on, which is really conducive to shorts. You got our POC on top of our unfair low. 45.59 stops can be oriented above there. Again, back in the balanced area, we pierced it. We're consolidating down here. NWL looks like a decent short. Let's take a look at a couple more here. Yeah, now looking at BWA, I just kind of looked at some cells and we're trying to find some things to kind of focus on. Again, you've got a weekly profile that's appeared below price action. This is one you got to stay away from on the short side, even though, it looks like we're kind of consolidating below here. The trade on this one, in my opinion, is, and we've gotten faked out once here last week, but the trade on this one, in my opinion, is to buy closes above 40.11 and trade it up into around 42. This one's not going to keep you up at night worrying probably, but boring is supposed to be good. Trust me. Bed Bath & Beyond, serious break the past couple of days. Let's take a look at the weekly on this. Yeah, and now you've got a price action appearing, you got a profile appearing above price action on our weekly here. So, this is probably going to have some more downside. And in my opinion, you could at least see more recent lows on this one. That profile appearing above is just a harbinger of bad news. All right, just gazing at the den here, trying to catch up. All right. A couple other ETFs we can kind of look down into. I'll tell you what, let's hit Apple really quick because this is the one with the most questions. So had a big, pretty good move yesterday. We've had, breakout again above recent balanced areas above 114.82. This was kind of an interesting situation when we dived back in. We talked about this getting below 14.82, especially from above that reversal. This is our daily. It was easy to look at this as kind of wanting to explore the entire fair auction. We came down and hit that 103.90. Let's see, what do we reach here? 104.08. So, but now we're again outside the balanced area. I'm sorry, I had the wrong. Let me get to our weekly. I don't know why this does this. Let me save my page here. Oh, for some reason it's labeled wrong here. 240. I guess we're all good. It's just showing the wrong time frames up there. All right, no problem. All right, we're good. So Apple, in my opinion, you're not to be selling the unfair highs on the daily, which are around 117.13. This is a pass right now. We're going to hit a couple of the usual suspects when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com. Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And one of the things too, before the beginning of the year, it's never a bad idea, and we used to have people do this in Chicago, is physically write out what their trading plan at least is supposed to be. And a lot of times I'll put it on a whiteboard and just slap it on the wall. It's in my face all the time. If I do something stupid, I always go back to it and say, wow, that was not supposed to be done that way. And based on the trading plan that's originally kind of you architect actually from the beginning. So a lot of times writing these things physically out, I know it sounds Mickey Mouse, but it's kind of a go back to. Sometimes you can get astray in front of these screens. So right before the beginning of the year, it's not a bad idea to write out your plan for the year. Some goals would be also not a bad idea. And limits, some of the things that you want to stay away from, and just basically an entire plan. So it's something we used to have everybody do in Chicago, and I still think that's one of the best things in the world. Tell you what, let's take a look at a couple of ETFs here, and I want to look at the XLE again. Again, this is another scenario that's kind of kept me away from wanting to short oil. I didn't talk about earlier, but you've got a profile appearing below price action this week. This is the weekly of the XLE. You got massive support now at 73.87, but again, these are really bullish setups, and don't really, putting 2 and 2 together, don't really see any reason to start stepping into crude on the short side at this stage. You got the dollar situation going on too. So before we end the show today, I want to hit the currency scene really quick. See these currencies, how they trade? Insane. It kills the servers. You got to spend a lot more money trying to crunch the numbers on the scanner side. So get the benefit of it. So the euro we talked about, again, the goal here is the par trade at 1. And this is the weekly. This is the recent breakdown. There's no change in tone. There's no divergences happening. There's no contra indicators that are going on to really cause me to think that anything different than this thing going into 1 is going to happen. We talked about looking at this. This is the one that I've had the big hedge on. Again, the dollar's poised to go up farther. That's a little bit of an inverse, well, more than a little bit of an inverse relationship on the euro. You've got the yen to a dollar yen situation. You got this profile appearing below price action on the yen. It's consolidated well above. These are all bullish setups. I want to look at the Aussie dollar really quick. This is one, again, kind of dollars hitting this one too. No reason to really try to pick any bottoms here yet on the Aussie dollar. That's kind of off the table. And let's take a look at the Chinese currency again. And let me see if I can pull this up. This is our weekly. Remember, we've talked about this setup again. A lot of these going on here that give clear interpretations of what you're at least not supposed to do with this particular product and other products we've looked at. I think the yuan's going up into 7. Guys, stay tuned. Larry's next. Have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.